Welcome back. You're watching All About Stocks on ET. Now, Prakash Diwan is still here with us and we're answering a few of your questions that came in during the week. Well, Raman has written in, he bought 1,100 shares, Prakash, of Reliance Media Works at an average price of 218 rupees. He wants to know what you think the long-term prospects of the stock is. Should he continue holding?
My sense is while the stock has been one of the most promising sounding mid-cap picks last year and before that, we need to understand, and especially the gentleman needs to understand that it's a business that is prone to a lot of uncertainties because it's primarily it started off as a film production house. And when you produce films, it depends on whether these films are going to do well or not on the box office, and that's something which nobody can forecast very easily. Given the fact that it has had a blockbuster in the form of Singham, that was one of the recent releases, and it was made at very low cost, there's a lot of money that the company has made on this count, but they also have a high budget production that I guess about to be released called Bodyguard, which might not possibly perform the same way as Singham did in terms of profitability. Now, when that happens, these kind of vagaries or uncertainties actually impact the stock quite significantly, and that's one of the reasons why a lot of institutional investors also stay away from such stocks. The fact that the company has diversified into a lot of allied activities in terms of enhancing its studio capabilities and they're kind of upgrading technology in a very significant way means that it will probably have more surer and certain revenue streams going forward, and that possibly brings the stock up to a decent level of about 130, 135 rupees, but that's still going to be way off the mark in terms of his average cost. So I would reckon that an ideal situation would be for him to book profits once that happens, probably move into some other stock, book that loss. Can't help it at this point, but don't wait for endlessly to reach that level again.
Alright, Raman, unfortunately, the advice that you're getting right now is that you might have to book losses whenever you can and possibly not wait for that stock to really break even for you on your investment. Our next question, Mohammed has written in, he tells us that he's recently made some money through the sale of property and he wants to invest 80 to 90 lakh rupees in the share market and he wants to invest in Infosys. He wants to know, Prakash, if it makes sense to invest in Infosys right now. Obviously, it doesn't make so much sense to put all of your eggs in one basket and put all of that money in one stock, but what would you recommend he do?
It's a classic piece of advice. Don't put all your eggs in one basket, and even if it's a stock which you find very dear or very good, please don't do that mistake because that's exactly where sentiments take over reasonable, rational thinking. So Infosys could be a great company, but as a stock, I don't think it makes for that great an investment anymore, at least this point in time, unless things change dramatically in the sector and for the company also. I would advise Mohammed to look at diversifying across at least about 8-10 stocks. We also already mentioned 2 stocks in the earlier section of this program. You could look into that. You could take on some of the other stocks like Coal India, ONGC, some of the financial, SBI, which is one of the largest banks. You would take up Mahindra and Mahindra Financial Services. So quite a few stocks that you would diversify across sectors, across market caps, across different behavior patterns, and make sure that you don't buy all of them on the same day. Though the attractive valuation that prevails right now could compel you to do that, but stagger your investment in at least 2 or 3 tranches and then be patient with it. So that's the most optimal way of doing things and not rush into the market just because you are sitting on cash.
Alright, Mohammed, a list of stocks that you can buy right now. Another piece of advice that don't buy all at one go, stagger your investment. And of course, don't put all of your money into one stock. That's advice we can all use. Prakash, thank you so much for spending time with us. It was such a pleasure to chat with you. And thank you for those recommendations on the stocks that you gave us. Remember, if you have questions, you can write to us. There's an email ID at the bottom of your screen where you can send in your questions on your equity investments. It will be our pleasure to answer them on this show. We've run out of time on this show, but come back next week. The same team will be here with more recommendations on All About Stocks. Thanks for watching.